Good evening. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, and we're at the 19th already of December, 2022. You know, I was thinking about it. This is not the sea of love, it's the sea of red. If you take a look at how many markets are still rocking and reeling from the Fed and the European Central Bank, the Bank of England, Swiss National Bank, bank after bank statements about monetary policy and fighting it. Now, tomorrow you get the Bank of Japan coming out, but under Mr. Kuroda, I doubt that you're going to get any change. They'll wait until April probably and get a new bank governor, and that's when he retires, and that's when the changes will happen there. But that's the only G7 country left not fighting the inflation market. Now, we have 3 days of trading left until the market's through for Christmas. And then we come back, and then we trade for 4 days, and then we go away for the New Year's, and then we're back to normal. Can you get yourself into trouble in this time frame? You can. Can the market still have the semblance of a Santa Claus rally? It can. It does not mean in a Santa Claus rally that you're going up for new highs. It means you're going to rally for a succession of days. The fact that it's not beginning exactly right now probably means it's right around actual Christmas Day, if it's going to happen. Let me put that with a big if. Doesn't have to happen. But if it does, I think it'll be more muted, and I think it'll happen from then into the first week or so of January. That's if it's going to happen. There's 2 dates that if you ever get my full subscription research, I wrote about this, got to be a month ago, and I gave the dates and how it works and where the arguments are between dates, between two different models. It's almost like when you look at weather systems, the American and the European. Speaking of that, I pray none of you are coming to Chicago. We are due for one unbelievable storm. They are getting the city ready. 12 to 18 inches of snow could be right in Chicago itself. 50-mile-an-hour winds. Temperatures below zero. And it's going to last a little bit. So there's a monster storm headed not just here, but across the country. It's going to be cold in the U.S. We're certainly going to have a white Christmas. The question is it a disaster one? Don't know. But it's going to be a rough one. And when I see this happen in Chicago and I see all the models come together, that is a bad sign. I've been through these before, and you'd like to go somewhere warm. In looking at Occidental Petroleum, we've never covered Oxy. So I decided, hey, let's dig this out. Everybody loves it. It's a Warren Buffett favorite, right? Okay. Well, again, he's an investor. You're a trader, I hope. This is a bear trend. And when you look at the market, you can see it's been a classic bear trend, by the way. You peaked out, and you have made consistently lower highs and lower lows almost all the way through. You had one pause on the low right here and one pause back here where it wasn't lower. And then the markets broke through those and kept going. The market is underneath the 18-day average, which is under the 100, and it just had a bearish crossover. So if you and I step back here and we look, you'll see that when that occurred, let's get over to it. When you get a bearish crossover, when this is going to cross the green, often, I wish I could tell you it's every single time, it isn't, but often, it leads to lower lows on the move as a whole. Now, the market was here fighting the 200-day moving average of closes, gets the crossover, you go in, you make the lower low, as you can see. So this is where the market is. It doesn't have to go lower. That was what it, in my mind, owed. Where are the other support numbers? The Bollinger Bands. They're right here. So you hit it up here, and now you have just drifted without hitting it. If it wants to go for a grand finale, you hope it gets to 60.05. The battleground right now is going to be the 200-day average, and if you can clear that, wherever the 18 comes in will be the next part of it. In terms of momentum, it's embedded. What means an embedded? Well, embedded means the pros are selling the rallies all the way through this as the market's coming down. It makes sense, and it's been working, by the way. You know, I've released my outside day course that just came about. And I'm looking on here because I can see the outside days as to when it kicked in over here. And that's the only recent one that I'm seeing on the chart, but it's a continuation pattern. And boy, did it ever continue once it went in. It's on our website. I'll talk about it right at the end of this. We released today for the general public. So, and I'm going to give you a special pricing through Christmas night, and that's it. Then my sale's over, and I won't have any more this year. So that's where you're going to end up. But still embedded means to me the market is still getting sold on the rallies until the red line closes over 21. In LIT, the lithium and battery tech ETF. Look at how this just keeps coming apart. I was watching tonight Lester Holt on I think it's NBC, and they had taken a car and they were driving in LA and they took an electric car and then they went to Texas. And it shows you the radical difference. They were within 50 miles of not getting any new charging facility at all. The ones that were there were broken in the area they were with. Electric cars are great for your neighborhood, your local area. Trying to travel with them a couple of 100 miles and push it to the limit, I wouldn't recommend it. And that's basically what they're said. You probably go on and catch the whole thing on the internet. In Apple, I am a bear, have been a bear since all the way back here. And this is not good news because the market is just plain, they don't have the phones for Christmas. This is what I've been saying. I admit, I heard Verizon say that they do have the iPhone 14 Pro if you do their special package program. So that was the first time I've heard that it's available. But that's the only one that I know of. And as you can see, you're oversold. Maybe you embed or not. I teach you never put on new shorts under a Bollinger Band. If it embeds, I'm going to get even more bearish. Now we get to the problem. Avatar came out. Let me put it this way. There's two ways to look at it. It's the fourth or fifth best grossing movie in a very long time. It's a complete miss on what they needed. They needed to get, ideally, to $180 million weekend opening in the United States. They got 130, 134 million. They didn't even meet some of the lower estimates that would have been good at 150 million. So what you'll hear, and this often does happen, you got to pay attention, if the movie gets good buzz, it'll stay in the theaters longer than normal, and that'll help. If it's just so-so buzz, it's a bust. And with it goes bust AMC and other movie theaters. This is the big boy that they needed. They're going to count on Babylon coming out. I know about this because I own the movie theater. So I can tell you how this works. But are you looking at AMC? Is it under $5? You remember when it was 30 and I told you it's a sucker play? And that was, I think, over the summer. And I said, I don't understand why anybody would buy that stock. I know that game. And I don't feel good about what can happen. I think there'll be much more restructuring, and I pray that it survives. We all want to go to movie theaters, but this is a blow. And here's why it's a blow for Disney. They didn't just shoot while they were shooting Avatar one film. They shot the scenes to do a franchise. So I think they probably have enough film to do another 2, 3, maybe more movies with this, just shooting what they did. If this doesn't work, it costs too much to put it out. Now, worldwide, the numbers were good. All right, they got 350 million from abroad, I understand. So that part's good. It's what's happening at home that I'm very concerned with, very upset. I didn't get to see it. One of my good friends that we were going to go see it, he got a terrible RSV or whatever they call that, and maybe next week we'll catch it if he feels better. It's always fun to go to the front 3-hour movie. But in the meantime, you're under the Bollinger Band. I wouldn't get aggressive under a Bollinger Band. It's an attempt to break out. Why? If you get another day where you make a lower low and you close under in the last bottom quadrant, under this low in the bottom quadrant, it could be. I'm counting on a Tuesday reversal. I'm hoping you get it. I don't want to see a problem there. In XLF, look at how you're just leaking away in price. Now, you got to get real scared because what I think is going to happen here in the financial services is you can see your numbers. Are we going to embed? So You count today, both numbers under 20, day before under 20, and the day before. You have an embedded reading. So this is the first market you're going to hear from me. If you get a good pop in it, I think the pros are going to sell into the 200-day average, looking for the market to come down again there. I don't think they'll sell it if you first make a lower low than today's low tomorrow, but that's for my traders in the morning. In XLI, here's your attempt in a downside, again, a setup for it. Now, you're not there yet. You got to get another day, just like I mentioned, under today's low, bottom quadrant, and that will set up a challenge for here, 94.38 to 21. If that occurs, market's got to prove what it can do. Monday breaks, deep ones can sometimes lead to Tuesday reversals. Where are you in XSD? This is where the pros, I think, are covering. You're now into the Bollinger Band, the 200 and the 100-day average, all three together. Does it mean it has to be? No. But each pattern here, and this is why this has been a hard trade since last week. Since going into, and I don't believe in going into the FOMC meeting with new positions. I'm a trader, not an investor. I've explained my philosophy to you. And to buy into the Bollinger Band going into a report, first of all, I wouldn't do it. Number two, I wouldn't go into the report because you can get the unknown. This was the unknown. You don't have to agree with me. The market's telling you. The market went into this euphoric. Pattern after pattern. Forget what this one is. They all look the same. This is what the market did. Okay, and here we are on Tuesday, the 13th, the day before the Fed, right? Fed comes out now, and then we're going to get Europe coming out with all the different banks. You pulled the plug on this thing. You caught the traders unaware. They didn't believe it, and they got themselves really caught in the market. Now you need restructuring on chart upon chart that looks like this, and you'll have the pattern right here. I'm not making the patterns up. This is what occurred. I can carry you not to this one, to this one even. Same type of patterns. The market's got thrown back by all the banks saying the same thing. And the one that put the nail on the coffin was the European Central Bank, because Ms. Lagarde has been the hardest thing to pull along to get into this bearish camp, if you will, and she's in with both feet now. So now what do you do with the recession talk? Well, in the gold, you're not bearish. You're still over the 18-day average. You have noise. You got to your objective. You backed off. Now the resistance is the 200-day average. The support's the 18. It's got to resolve itself one way or the other. Here's the 13th. Here's your sell-off. It's one after the other. The 13th. The sell-off. Are you picking up the story? Now, copper could have more damage if the numbers out of China ever get released on the COVID situation. They have kept them close to their vest. We're not hearing about them in the West. But when I look at the pictures that people were showing over this weekend of Beijing and other big cities, and how they were showing stores closed, restaurants closed, and the government didn't close it. The people are saying, hey, my workers won't work. There's too much spreading of the disease. We got to shut this down temporarily. That's smart as can be. They've been, if you will, they've been educated as to what to do. Stay home and let this event pass. But what does that mean for copper? It can't be good. I can't imagine that. Everybody's talking how China's going to grow. You got to get past COVID. You got to first get to Tuesday before you get to Wednesday. They may grow next March. I don't know. I'm guessing that's the key. But what do you do right now? And that's the name of the game. In TLT, you have a higher high, lower low. Is the market going to accept and start the break? Now, this is the 20-plus year bonds. Understand that's the long term where people are saying, no, we're not going to put interest rates up. Well, I can't argue that that's not true. I think they did possibly meet a peak if inflation doesn't prove as sticky as it could. If it gets real sticky, no, then that's not right either. But right here, the market had its day in the sun, and it's rolled over, and if anything now, it's starting to leak. And if it wants to leak a lot, you can get back down here. You lost the embedded reading. When you did, you were owed the 18-day average. You got there. When did you get there? I'm going to walk you right to this. Okay, so you have your embedded reading. You lose it. Market should first hit the 100-day average. That's the immediate target. As it turns out, it drops down with the 18, and they're both going to come together here. So now you get a bullish crossover where the 18 gets over the 100, and this was on Friday. And now what the market does today is it gets underneath everything. So instead of setting up a target to retack that, the enhanced Bollinger Band course teachings came to play, and the market had to get back to these averages. Now you got to wait. This is a temporary failure. What would make this come alive again back to the upside? You got to get up and close over that 18-day average and keep it over the 100. It could easily round back down, and if it does, it's an all-out sell signal, in my opinion. Doesn't mean I'll be right. UUP, you're oversold, you're bearish, and you could get another bearish crossover where the 18 gets under the 200-day average. There's nothing at all friendly there. In an FXE today, I got very lucky. I had told traders to buy this market. I admit that on Friday. They bought it. I told them to come out today in my morning subscriber video at a price. I put in the orders. They got filled late in the day. Lucky, profit. You don't always get that. And why am I not wanting to stay? You lost the embedded reading. That's enough for me. When did you lose the reading? You started losing the reading on Friday. That's why I went defensive. A reading under 79 does it. Could it re-embed? Absolutely. All it needs to do tomorrow is get a reading back over the 80 level, and I'm back into the bull camp. But if you can put on a position, you don't like it, for the reasons I'm given, not that you woke up and you went, oh, I woke up on the other side of the bed, I don't like it. Got to be a reason that makes sense, and you can scratch, get out of the trade, small profit, whatever it is. I have learned over the years that the smallest loss you can take on a trade is the right trade, okay, if you're wrong and you think you're going to be wrong, and taking the smallest profit on a trade you don't like, even if it goes your way. It's the right thing to do if the reasons for wanting to come out of it made sense. And when you lose an embedded reading, I'm going to follow that every time that it gives me what that's going to be. Now, as I said, I have completed, and it is out now, our outside day course. So if you're a trader that's saying, hey, the market's bullish, I want to weigh in, you get an outside day up, how do you work with it? You're bearish, the market gives you a rally, you get an outside day down, how do you work with it? What if the outside day exceeds? You have an outside day down, you take out that day's high within a certain period of time. What does it mean? This pattern shows itself, folks, all the time. I mean, open up 10 charts, and probably within those 10 charts in the past 2 weeks, you've had an outside day on several of them. How does it work? What do you do with it? With the course, I give you the charting software. It's a $60 value. I'm going to give you access on my research for 2 weeks. My charting software, I'm going to give you, generally you have it for a month. So the value of those two is the value of the $90 price during Christmas. The course is $120. I took the price down for Christmas to $90. If you're one of my subscribers to my courses, a paid subscriber, you need not worry for a membership. This is one price for all, you included. My members normally get, that are current subscribers, about a $15 discount. I'm giving a 25% discount on this time, which is $30. So everybody's a winner if they want to take the course. The sale ends this coming Sunday night. I'll keep it up right into Christmas. At midnight it comes off. It won't be honored again. You can give it as a gift. When you buy it, you don't start it. You let us know when you want to start it. We'll coordinate all of this with you and away you go. What a great course to learn over, obviously, the Christmas holiday into the new year, and you have another piece of your arsenal. It took me a long time to put this one together. It sounds simple. None of these are simple to work with. So I do appreciate you considering it. You can move your cursor to the top. Up here, an icon will appear. You can go on the website under the word education. It's all explained right there what it is. Short video that I explain how this works for you. I'll show you some of the patterns that you see on there too. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.